Hello everyone, it is Evan from the Trade Risk here on Wednesday, December 2nd with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, leading and lagging sectors, and then get into some individual names, no trade ideas in this video today. Now jumping into the action, it was a fun day today. The bears took control. We closed down 1% and we completely reversed and then some of yesterday's breakout out of this immediate range that we were watching. So if we zoom in here, we know that we've been in this very tight coiling pattern here, basically between 208.50 and upwards of 210. We had this brief gap lower, and then we recouped it, and then yesterday, of course, was the breakout out of this range. That was the resolve, and we're in the context of an uptrend. You can see the fast moving averages are all below bullishly aligned supporting price, and we are stuck within this larger term range down here from 202 to 211, and 211 just above that is all-time highs in the SPY. So yesterday was a very sort of optimistic day, right? We broke above this 5-day resistance. We were heading towards the top end of this range, and we were heading into a few catalysts which we knew could be there to catapult us or accelerate us higher from this breakout here and potentially take out and challenge this prior pivot level, or it could be there to turn this into a false breakout, reject back into this range and sink lower into this larger intermediate term range. Now, of course, as we find out here, it was the latter, and the bears really just had control here, but they had control prior to the FOMC, or prior to the release at 2 p.m. This afternoon, really at the beginning of the day, as the market was sort of treading water right at yesterday's close. The internals were suggesting a very kind of soft look there. It did favor the bears in terms of stocks declining versus advancing, and you did see that just continue to accelerate throughout the day, and more so after the 2 p.m. announcement. So where we are now, I think today is certainly a day to take notice. If you were playing for that breakout yesterday, you didn't get it because this certainly rejected it. We're back into this range. Now, this could just be a one-day fake out, and tomorrow we could be up 1%, and the party is back on. But until that happens, we don't really want to speculate that it will. We want to respect the price action that happened today. So I think if you were playing that breakout yesterday, you should be either reducing exposure or at least, tightening up those stops or being aware of where those stops are. For us, I think we had just about the highest long exposure yesterday that we've had all year. Now, of course, looking back at it, that didn't work out too well for us, but we did reduce exposure. We did get out of a couple of names, namely LYB, this name that we tried to go with, that tried to get going yesterday, just couldn't quite hold in there, so we had to cut that one. HCA, another one, tried to break out yesterday, had to cut that one, but we did have other names that work. So ARMK, a nice one that's pulling to new all-time closing highs, as a matter of fact. So you have a grouping of stocks, you try and pick those outperforming names, and you will have some that completely ignore the market weakness, and hopefully your strategy will help you get into those names. So for us, we reduced exposure today from about 85% long yesterday to about 50% at the close today. And if we continue to see further weakness, I would expect us to continue to reduce exposure as the market sort of tells us to. Now, with respect to the SPY, one last comment, I would say that this 208.50 level is an important level. It's essentially the lower end of this recent range that we were in. So if you're on the bull side there, I think you're hoping that today is going to be sort of a one-day event, or you're hoping that tomorrow looks like Tuesday of last week, where we gap lower and then just trend higher all day. I think that again would be very constructive and would at least save where we are in the markets. I don't want to overstate just a one-day event because we are still above the 20 period exponential moving average, so we're still holding pent up relative to this trend that we've been in, but you do just need to be aware that this initial breakout move has failed. So a little bit for both camps there. Again, I think you had plenty of names that were underperforming and you could take advantage of on the short side. You had some that continued to work today. Technology was still a relatively strong sector today, or outperforming sector, I guess I should say. So it's a mixed bag, and like it almost always is, there's always opportunity out there. So that's sort of where stand on the SPY. If we look at the IWM, you can see here threatening to break back below this recent pivot high of November that we did break above just a few days ago, or actually last week on Friday. So again, this market though, I mean, still look, we're above the 8-period EMA. So even though we're down 1% today, let's not get too worried here given where we are. So I think context is very important there. The IWM still in a very healthy uptrend, just barely breaking the steep uptrend that I could probably draw from here up to here. So that's where we are there. And then the Qs just failed, poked its head up above, trying to make new 52-week or multi-year highs here, and it failed, and it reversed lower, and it closed at yesterday's low, again above all of the fast-moving averages. No real technical damage to speak of. And again, while we're on that note, the SPY, well, we'll get into that mostly of why this one was so affected shortly here, but that's sort of the stance on the overall market. Let's look at some other markets. TLT. So this one had a strong bid yesterday, a nice 1.14% day yesterday. Today went sideways. It was looking like it was going to start to retrace some of that, but it did reverse after 2 p.m. today and continued to close flat on the day, just slightly positive. So starting to look a little more constructive here, but still in a larger messy range. Not too interesting one way or the other. Here's where a lot of the drag came today, especially in the SPY here, and this was USO, and commodities in general just got destroyed again today. So crude oil back down to new lows, just about challenging them. Let's see, did it actually make a new low? 1238. 1237, 1 penny shy of the low from August, but effectively it's there, and it is a clean breakdown here. So really, I would expect this to head lower. You can see the fast-moving average is still racing lower. It based out, tried to put in some type of bottom here for a couple of weeks. It couldn't do it. We broke down hard today, so we'll have to see. Will we see continuation to new lows, multi-year lows here in USO? My guess is yes, but we'll have to see what happens there. UNG, very similar situation, although this one's just continuing to trend lower more aggressively. Fast-moving averages racing lower. Really no end in sight to the selling here. Commodities too. I mean, everything, one we don't usually talk about too much, but again, making new lows here. DBC, the commodity index that tracks a bunch of the hard and soft commodities out there. So everything just getting hit there. Gold continued to get a break to new lows today, down 1.55%. Silver, again, holding up relative to gold as it has been, trying to cling on here, but still making new recent lows here as well. So that's unfortunately where a lot of the weakness came from today. If we look at some of the sectors, again, XLE, this is where we did see this start to break down a little bit, up down 3% today. Didn't quite, hasn't quite lost what I would consider this range, although it's right there. Anything continuation lower from yesterday is just going to spell some trouble for this sector. The utilities got hit. This had a 2.2% down day for the utilities, snapping this bear flag, little rising trend line you had here. So that one looks to be in trouble, and everything else just kind of hanging in there, looking sort of neutral to slightly optimistic in some cases. XLK again, similar to the Qs, above all the fast moving averages and so on. So that's sort of the sector breakout there. If we look at some individual names, we'll run through these pretty quick. Apple looks like it's starting to roll over here. It's breaking this recent 5-day support. This looks like a pretty actionable short. Again, this is just a messy stock in general, I think, given it's sort of very range bound, but looks fairly actionable on the short side. Google tried to continue today, couldn't quite do it, reversed, but still holding to the top 1/3 of yesterday's breakout bar to new highs. Netflix completely shrugging off the weakness today, closing at new all-time highs. It's a monster. It continues to be ever since breaking out of this level over here, right around 115, 116. Amazon, similar situation to Google here. Couldn't quite hold these all-time highs. Gave a little bit back, but still very, very strong. Facebook gave some of yesterday's little bullish igniting bar back. It is above all its fast-moving averages. Pretty actionable. It's getting pretty tight in here for Facebook, so something that's got my attention here for some potential for a potential setup here in the future. I think as long as it stays above 104.50 or so, then the bulls are still in control on this one. Twitter. This one just very, very, stubborn to hold on here. It doesn't want to quite give up this $25 level. I think it's a very important level. If it does roll over from 25, could see a quick flush lower because the support's been tested and sort of grinded upon for quite some time. So you definitely want to see that hold there if you're bullish in Twitter. GoPro, all things considered, held up pretty well today. But still just in a world of pain over the past few months. Alibaba, this one ignoring the weakness here, up 1.18% today, so very constructive coming into the pivot high here from November. And then finally Tesla giving back much of yesterday's gain. We want to see it try and hold above 230. This was this pivot high from here, and again a little bit from October we tested that. So 230 or so is a level that we'd want to see hold if you're on the bull side of Tesla. And that's about it. I think that's all I have for individual names. I don't have any trade setups in this video. I did post some yesterday, so check that out. And that's about it. So thank you for watching. Best of luck trading. I will catch you next time.